All right, guys, welcome back to the channel. Today I'm back with another educational content for you guys, and we will discuss today about fib extension tool. Okay, how the fib extension are drawn on Elliott waves. I've also done the Elliott wave tutorial video on my YouTube channel. And okay, why I'm saying YouTube channel when I'm posting this on YouTube as well. So I have TikTok subscribers as well, and they might be wondering right now that we haven't received the Elliott wave tutorial. So for TikTok subscribers, I would recommend you to go to the YouTube channel at Orca TKW and check for the playlist. And you can find a bunch of educational content in that playlist as well. And one of the content is Elliott wave tutorial video. If you're a regular viewer of this channel, or if you're a new viewer of this channel, I recommend you to like and subscribe so that you don't miss any educational content which I provide in this channel. And also turn on that bell notification so that YouTube can remind you whenever I post an educational content or a daily update. So let's move into today's content, and that is fib extension tool. How to use fib extension tool on Elliott waves. So for that, we do not need the Bitcoin chart here. We just need a clear chart. And in this, we will try to draw all the scenarios on Elliott waves. Also, while I'm drawing this Elliott waves, I will also explain you a simple rules on Elliott waves and why the waves are moving in such a way. So in Elliott waves, we have two types of waves. Okay, there's only two types of waves. They could be impulsive waves, or they could be corrective waves. Okay, impulsive waves are moving in 5 waves. Okay, like this. And corrective waves are moving in 3 waves. Okay, there are other corrective waves as well, like for example, a WXY. Okay, this is also your corrective wave. And ABC is also a corrective wave. There could be a triangle, for example, like this, A, B, C, D, E. This is your corrective wave as well. So we will have to join all this line, okay, these dots, so that you can make it look like a triangle. Okay, and then after we have this triangle, the price travels to the upside. Okay. So these are your corrective waves. And I will get into these corrective waves as well. I'm not going to go into too much detail in this Elliott waves, because there are a lot of waves. But impulsive waves are only 2 types, which I see happening on the price action. So this is your one of the impulsive wave. And another one is also with a 5-wave structure. And that could be a leading diagonal. Okay. This is your initial impulse as well. So that one need to be joined with these trend lines as well. Okay, so this is your contracting leading diagonal. Okay, now you can see the bunch of different waves in this screen. But I want to explain first in this impulsive wave here. We have the price doesn't move in a straight line. Okay, everybody knows. This does it look like a bull market to you? Let's say we have a bear market here. Okay, wait. All this price action here. Now assume that you do not see anything here. You only see this part here. Okay. So we have entire bear market down, 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 down. So from the bear market, when we turn into bull market, this could be your impulsive wave to the upside. You can see in the price action. Let's go to the price action here. Okay. So do we travel from the bottom in a straight line? No. We go 1, 2, 3, 4, 5. This could be your ending diagonal here. Okay. So I begin with the leading diagonal here. This was your leading diagonal. Also, this can happen here at this zone. 1, 2, 3, 4, 5 as an ending diagonal. I'm going to draw it for you. So from this bottom, 1, 2, 3, 4, 5. Okay. It could happen this way as well. So I will delete this one. So you understand the theory. Price doesn't move in a straight line. It goes higher, corrects, higher, corrects, higher, corrects. So when we talk about this impulsive wave up here, you can see also price goes up, corrects, goes up, corrects, and goes up again. So in this structure itself, we will have 5 wave within here, 3 wave within, 5, 3, 5. What is 5, 3, 5, 3, 5? So when you see the straight line here, this is your 5 wave move up and 3 waves move down. Because this is your impulse, this is your corrective wave. Impulsive wave, corrective wave, impulsive wave. So what I'm trying to say that within this first wave here, we can have 1, 2, 3, 4, 5. And then corrective wave. And A, B, C. Again, impulsive wave. A 1, 2, 3, 4. Okay, this we will have to draw again. Okay, this. A 1, 2, 3, 4, 5. And then corrective wave could be a W, X, Y. And then again, impulsive wave could be a leading diagonal. 1, 4, 5. Okay, this could be the case. So why not an ABC here? Why WXY? Okay, forget about WXY. It could be also a triangle here. A 1, yeah, could be a triangle. And then we can move up from here. So what I'm trying to say here is within this singular wave, what you see, there are inner waves within this impulsive wave. I'm going to show you in the price action. Can you see in the price action? This is your 1, 2, 3, 4, 5. And your corrective wave, A, B, C, flat. So this goes on, okay? The corrective, impulsive. This is also your impulsive wave here. You also can count 1, 2, 3, 4, 5. And this is your WXY. And this is your ending diagonal here. So what I'm trying to say that within this one wave, we have 5 waves internally. And within this second wave, we have ABC or WXY or a triangle, okay? And again, 5 waves, 3 waves, 5 waves, 3 waves. It repeats. And in the bear market, you can have this ABC here, or you can have this WXY here. Okay, in WXY, we have only 3, 3, 3, which means 3 waves within. It's a combination of 3 waves, ABC, a WXY, and ABC, something like that. Okay. In ABC, if it's a zigzag, we can have 5, 3, 5. We can have a 5 wave to begin with, a 1, 2, 3, 4, 5. And then another ABC, for example, a flat ABC, like that. And also, again, to end with, a 1, 2, 3, 4, 5. Could be possible. This is a zigzag in ABC correction, but also it could be 3, 3, 5. That's a flat, the regular flat. And 3, 3, 5 is only this A wave is 3 wave, B wave is also 3 waves, and C wave is with 5 waves. And there are different type of flats as well in ABC. So the flat, sometimes this B wave can exceed this beginning of this A wave, and then the C wave can also exceed the ending of this A wave. This is called an expanding flat. A typical market maker model or a structure which is sweeping the liquidity both the sides. You can see slightly going higher, sweeping this, stopping these stop losses, slightly going lower, stopping these stop losses. I mean, when the traders are going long here, when they see this price action going higher, they say, oh, the price is strong, so let's go long. Stop loss is here. The price reverses, comes back, takes the stop losses, and then shoots up. So this is your typical expanded flat where it sweeps liquidity from the both sides, here and here. Sorry, here and here. And there is also a running flat where the C falls short and it actually does not sweep the liquidity at the bottom. So this is your running flat, and then the price moves up higher from here. Okay, so guys, if you want a detailed explanation, you just have to go and check on YouTube playlist. I have gone in depth for a beginner video. I have really explained it very well on this kind of structure. So, and also there is one more flat, which is a regular flat where the B doesn't take out the high of the A beginning and C extends to the downside. Okay. So now we will finally talk about the Fib extension tool and Fib levels. Okay. That how we can use those Fib targets and expect the price to travel in such way, and we can play within these structures. For example, let's say, okay, let me expand this a little bit so that you can have a clear look. Let's say you go long here. Then here, you do not have to wait for this price to retrace down and wait in this long. And see, let's say you got in here and you reach up to here, this you become around $1,000. And then the price is retracing. You see your account going 900, 800, 7, 6, 5, 300, 100. So you had $1,000 gain here, and when it came back, you have only $100 right now. So you feel like, oh, the market might be going more lower. If you do not understand the Elliott wave structure, then you might be thinking here that the market is going more lower. So let's sell it. At least I will have $100 in my hand, right? And then the market reverse here. So if you understand the Elliott waves, then you could go long here, you could go short here. Okay, you could maybe not finding the exact top, maybe slightly lower here, and then you go short. Then you get out of that short, make that money. Okay, hedging against this long. So when it comes down, you also make money, and when it goes up, you also make money, right? So if you could understand, let's say after this second wave finished, how much further the price will go, would you not use the fib extension tool? Of course you would. So now I'm going to use this tool here. Can you see this tool here? Okay, this is my favorite bar here. You can see the toolbar. This is my favorite toolbar here. And in this is your fib extension tool, okay, which we will use now. So I'm going to use from this bottom, okay, the first point for this fib extension tool to the wave 1 top. And then when the wave 2 happens, you come down here, okay, and finish that dot. So what do you see here? Okay, this one is that flat structure. Let me use the fib extension. Okay, so now that you see this target here, let's zoom in a little bit. So you have different targets here. You have 0.786, 1-to-1, 1-to-1, or 0.786 usually for this WXY here. Okay, I will explain later about this. So now the minimum push what we can get for this third wave is 1.618. Okay, because as I said, the third wave cannot be the smallest. So when you have an impulse from the down to the second bottom, the third wave usually goes up to 1.618. But if the price is strong and it wants to extend, it can go to 2.618. Sometimes I have also seen in crypto, it goes up to 3.618 as well, 3.618. Okay, so now we will talk about only 1.618. Okay, this price can come up to here. Let's draw this one 3 to this zone. Now 4 cannot overlap into first wave territory. Usually when you have such big retrace on the second wave, can you see the second wave here? It is a big retrace. When we went up here high, we came down and retrace until here. So this is a big retrace. Sometimes the retrace can happen only 0.236. And then your fib also adjusts to this level and your 1.618 gets a bit higher here, right? And then the fourth wave can come down a little bit deeper. And then fifth wave can extend. Why this fifth wave is extended here? Because your third wave is not extended. It is slightly higher than what is this 1.618 target? If this is a 1-to-1 move, then it has to move until here. This is equal to this move, okay? The first wave and the third wave, when we do this 1-to-1 target, this is exactly saying that the first wave and the third wave are equal. So that's why it's a 1-to-1 target. But usually in the impulsive wave, it does not happen that way. It always gets up to 1.618. Okay, slightly can shoot up until here and then retrace. So if we have only the target for the third wave 1.618, then there is a possibility, it is not a necessary, it is not a guaranteed, that the fifth wave can shoot up higher. Or sometime it can do only this. And then we can have that ABC correction. Okay, something like that. But let's say that this third wave shoots up to 2.618, and then the correction can be like until here, and then we can have that fifth wave. We also have a target for this fifth wave. Okay, this is also an extension again. So what we have to do is, once we finish this third wave, we might finish it here, here, or here. Okay. Once we finish it, we have to delete this. Delete the fib extension tool, and then use another fib extension from this bottom to this top and to this bottom here. And then find out where the fifth wave can extend up to. The minimum target for this fifth wave is 0.618, or at least sweep these highs. Okay. Let me use the 0.618 as well for this. Okay. So it can come up to 0.618 here, and then we can have a retrace. Okay, like an A, B, C. C can go deeper. Or a W, X, Y. Okay, can be this way. And the maximum target for this fifth wave is this 1.618. If in case your third wave was smaller, okay, then this extension tool also goes smaller here, and then your fifth wave can shoot up to 1.618. So that's how it looks. When you use the fib extension tool, you can have those targets, but it is not necessary that it has to go up to 1.618. It can also come up to 1.236 or 1 to 1. Okay, these are all the targets, you know, for this is the minimum target and this is the maximum target. So you will have to look out for where you can get a rejection here. And that's how you use this fib extension tool on the price projection, okay, for the impulsive waves. And what are the impulsive waves? As I said, this is your impulsive wave, this is your impulsive wave, and this is your impulsive wave. Now this is your corrective wave. How to understand how much it will retrace here? So for that, we will use the Fibonacci levels, and that is this tool, in my favorite, the first one, okay, fib levels tool. So when you use this one, you will have to drag it from the top to the bottom here. Okay. Okay, let me use it like this. So now you can see the second wave can come down until this 0.5 level or 0.382. Sometimes traders use this reversed. You know, you can use it reversed as well. Like, okay, this one. Sometimes the traders say, okay, this is your zero zone, and it can come up to 0.618 or 0.5. Sometimes even can come up to 0.786 here. And also sometimes it can come up to 0.9. So that's how you check the retrace can happen up to which level or which price. Okay, using this fib levels tool. And it also goes the same. Let's say the wave 2 retraced 0.9. That is a big retrace for a first wave, right? So the third wave and the fourth wave might not retrace that deep. It will just go sideways. Can happen only 0.236 or 0.382. So now we will have to adjust this tool to here, this top, and to this bottom here. Okay, this is your bottom. I'm just keeping the line here so that we can have the price action here. So this is your bottom here. So you can see this price here retraced only 0.236. Why? Because the second wave retraced pretty deep, that is 0.9. That's why the price could retrace only 0.236 or 0.382. But this is within that territory. You can see that we are not overlapping into first wave territory, right? So we can have a retrace until 0.382, and then we can shoot up higher. So when you see this price here, the second wave retrace 0.9, you can expect that the fourth wave might not retrace deeper. And this is your invalidation anyway. Okay, the first wave here, the top of this first wave is invalidation anyway. So you might not be getting this retrace until 0.618 because it's already overlapping. So you can get until 0.5. So if you're sure that you cannot be sure in the market, okay? So you can dollar cost average into another long order at this 0.236, maybe, let's say you have $1,000, okay, for this particular long order. So you can use $250 here at 0.236, and then you can use another $300 here at 0.382, which means you already used $550. So now rest of $450, you can use it at 0.5 level, which means you have already, you are heavy, bottom heavy here. You have 450, 300, 250. So the average price will come around here, okay, if the price goes down. And then you can ride all this way up, okay. If the price comes down here 0.5, you can ride all the way to this the fifth wave to the upside. You will make profit. And same it applies also here, okay. You can also use this level for the first wave, and also you can dollar cost average. The minimum retrace is 0.5 for the first wave. No, the minimum is 0.382, but usually it retraces slightly more than 0.382. I have seen this in crypto, I have seen this in stock market, in commodities. It always retraces beyond 0.382. Okay, so you can start dollar cost averaging from 382 until 0.9. Okay, go lighter on the top and go heavy on the bottom. And now on the corrective waves, how we can use this same tool. Let's check it on ABC now. Okay, WXY is very easy. The target for WXY is 1.0, which is 1 to 1, or 0.786. The minimum target for a WXY is 0.618. Okay, so from this top to this bottom and to this top. Okay, so I will just drag it a little bit more further so that we can have the price action. The tools with the indicators of the price here, how much it can travel. Okay, the minimum target for a WXY is 0.618 and 0.786. 1 to 1 is the ideal target, but WXY can go up to 1.236. Okay, and if it goes beyond 1.236, then that is not a WXY, it's an ABC. Okay, because ABC has a target of a 1.618. So this Y we have to move 1 to 1. This is the perfect WXY. Okay, sideways correction. Usually it's chopping around on the sideways. So that's your Fib tool extension for a WXY. And also you can use the Fib levels in this. And usually the X wave retraces deeper until 0.9. Okay, I have to reverse this once again. Okay. So you see this WXY can retrace until 0.9 here. It can also come up to 0.618 around this golden pocket here and then go down. But preferred is 0.9 because X can retrace pretty deep because it's a sideways chop. And then Y can come up to 1 to 1, which we have already checked. So for a long order, you can get into long here until 0.618 and slowly start to sell until 0.9. And then you can go a short, begin from 0.618 to 0.9, go lighter here, go heavier here. And then after that, ride all the way down to Fib extension of 1 to 1. Okay, that's your WXY. And now checking for this ABC correction. ABC correction can happen on Fib extension tool, for example, from the top here. Okay, the minimum target for a flat is, okay, for this top, okay, from this top to this bottom to this top. Okay, I'm gonna just drag it to the right side a little bit. So the ABC can come to 1.236. All these are valid targets. Okay, even it can slightly spike more than 1.618. Sometimes I have seen in crypto that the C wave can travel up to 2.618. Okay, an ABC can travel up to, a flat can travel up to 2.618. But that's very rare. Maybe 95% of the time it's 1.618. And in ABC, you have different type of ABC. So as I explained before, the B wave can go up higher, C wave can come up here. Okay, this is an expanded flat. In this, you can have a 1 to 1 target or 1.236. So you can see. Okay, 1 to 1 target is always a running flat, because I have also explained before, there are different type of flats. One is regular flat and another one is running flat and another one is expanded flat. Expanded flat usually goes up to 1.618. Running flat can be 1 to 1. Okay, and the regular flat can be also 1.618, but the B wave does not exceed the beginning of this A wave. So this is a regular flat. So Fib extension tool, we have to adjust it. Okay, so this can come up to 1.618, 1.236. So these are the targets for the ABC flat. So this is how you use the Fib extension tool on corrective structures and impulsive structures. And also you can use the Fib level targets so that you can long or short we can find exact area, or you can dollar cost average into a position where you can write the price to the upside or to the downside. I hope you guys found the value on this video, and I hope you enjoyed the video. And if you do enjoy the video, if you like this type of content, then like and subscribe to the channel. And I will see you in the next educational content or next daily update. Until then, guys, trade safe and peace.